Hey everyone, Pepsi is scheduled to report quarterly financial results on Thursday, July 11th, and I wanted to preview those financial results and answer the question if investors should buy PepsiCo stock before earnings or after earnings come out. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Alright, so in its latest financial results in the first quarter, PepsiCo reported 2.3% revenue growth and 6% EPS growth. If we look at organic revenue growth, the company delivered 2.7% and core constant currency EPS growth of 7%. Before I move on, let me explain the difference between GAAP revenue and organic non-GAAP revenue. Companies like PepsiCo are exposed to several different currencies worldwide, and those changes in currencies impact the company's reported revenue and profitability. So when you look at GAAP revenue and GAAP earnings per share, that includes the impacts of currency changes. Organic core non-GAAP revenue and profitability exclude those impacts. So you're looking at the company, how it performed, sales and profitability without the changes in currency, which to me is a more informative look at the business's performance because you're stripping out currency changes. Currencies longer term are what's called a random walk. You don't know if they're going to go up. You don't know if they're going to go down. There is very little predictability in terms of increases or decreases in currencies. So as an analyst, what I want to look at is the core performance of the business, not how it benefited or lost from changes in currency values. So I like to look at organic revenue and organic profit more so than non-organic or GAAP for companies like PepsiCo. Also, these include the impacts, the organic revenue includes the impacts of acquisitions and divestitures. So you'll notice here if there's any change in the company's revenue because it had one less business segment this year compared to last year. All right, and companies like PepsiCo and Coca-Cola, they're making acquisitions and divestitures. You don't say, frequently, but it happens more often than not. And so you want to consider how the business performed without thinking about the changes because of one fewer business segment or one more business segment. So they went on to say that they delivered sequential improvement in their volume trends and year-over-year growth in net revenue, operating profit margin, and earnings per share. And that was despite the impact of product recalls at Quaker Foods North America, which caused revenue in that segment to fall by more than 20%. And they had a difficult revenue growth comparison with the prior year. The same quarter last year had more government stimulus benefits involved, had more of the stay-at-home trend where consumers were still spending more time at home in the same quarter last year than they were in the same quarter this year, right? That trend has accelerated year over year and has been accelerating ever since the economic reopening gained momentum. So PepsiCo was doing phenomenally well during stay-at-home trends, right? People were spending more time at home, snacking more often, consuming PepsiCo's beverages and snacks more often. And so as economies have reopened, that's been a headwind to PepsiCo's results. They go on to say that they're focusing their efforts on executing well in the marketplace, and they want to elevate and accelerate their productivity initiatives to support continued investments in their brands, capabilities, and the Pepsi Plus initiatives. So in other words, what the company is saying is they want to work to improve efficiency in the business, and then those cost savings or productivity enhancements that they experience, they want to take that and invest that money in their brands, more marketing, more promotion, more advertising to support the brands. That's where they're not just trying to save money for the sake of saving money, but they want to improve efficiency and save money so that they can increase their advertising and promotion budget, which for PepsiCo is a competitive advantage. They've proven over the decades to be effective in their advertising and promotion campaigns. And as an investor, it's a reasonable strategy to continue. Now, they said they expect to deliver at least 4% organic revenue growth and at least 8% core constant currency EPS growth in 2024. So if you look at where they were so far in the first quarter, which was 2.7% revenue growth and 7% earnings per share growth, they expect to improve that, especially revenue growth, over the next few quarters. So things are going to accelerate for PepsiCo. They're going to get better for PepsiCo. And I think that's a relief for investors because of that trend I discussed earlier. That reopening trend has not worked well for PepsiCo. They did much better when people were spending more time at home. And so there was a little bit of a concern that their results will continue to worsen. Also, there is a more longer term risk here with PepsiCo in that these weight loss drugs that suppress your appetite, investors are concerned that that's going to decrease consumption of products like PepsiCo's snacks and their beverages, more so their snacks like the Frito-Lay segment in chips. And so that's an overhang for PepsiCo, and you've seen that in their valuation. PepsiCo stock is trading at its cheapest valuation going all the way back to before January of 2022 even. They're trading at a forward PE of 18.39. So there is concern from investors about PepsiCo's long-term expectations because of these weight loss suppressants. I acknowledge that is a concern for PepsiCo and PepsiCo stock investors, but I think those risks are overblown. I don't think PepsiCo's business is going to be hurt all that meaningfully from these weight loss suppressants, from that one area, that one segment. There are other risks to the business, but I think that one risk in and of itself has been overstated in recent months, ever since these have become more widespread and gaining popularity. I think it's too early to jump to conclusions and think that PepsiCo's results are going to decrease by all that much. I think the company has proven a stickiness with its customers, the habitual nature of its products. They've proven that well enough over a long enough period of time to give me confidence that they will continue to become a mainstay in consumer consumption in beverages and snacks over the longer term. Even if it might decrease on the margin from the impact of these recent developments, I don't think those incremental impacts are going to be large enough where it deserves a huge decrease in valuation expectations. So all that being said, do I think PepsiCo stock is a buy before or after earnings? This is where I go back to my previously stated philosophy and strategy around earnings. I typically advise against buying this close to an earnings release because there's so much information that's been priced into the stock at this point, but that information isn't publicly available yet. Wall Street and other more sophisticated investors have had an opportunity to digest a lot more pieces of information about what Pepsi is actually going to report in its upcoming earnings release. And that's included, right now, it's imputed in its valuation. So by waiting until they release their earnings to then make a decision on whether or not to buy, from the everyday investors like ourselves, I think it's a lower risk purchasing decision. And so I typically guide towards that. And I'll do it here with PepsiCo. And I'll say it would be safer, less risky to wait until after earnings come out to buy PepsiCo stock. But just looking at the stock itself and the valuation and the prospects, overall, I think the stock is a buy. So if the company comes out with earnings that are in line with what it's forecasting for 2024, and there aren't any big fireworks on the downside, and the stock price is relatively around where it is today, then I think it makes a good investment. But if there are big changes, then I think that would require another look through in the company and a reevaluation, of course, which I will provide you. I will review the company's earnings results and provide an update to this recommendation. But I think it's a good business, selling at a good price right now. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.